YouTube? What is good, everybody? This is going to be a short video. This is just a trade breakdown of this trade that I took right now. As y'all can see, it is 1:39 a.m. in the morning. It is 2:39 a.m. New York time, so it's London session right now. I was up, so I decided to go ahead and just take a trade, because why not? Why is it doing this? So basically, I want to do a trade breakdown for y'all as to why I took this trade. Obviously, from what y'all are seeing right now, I hit TP. I want to show y'all that, I am still trying to trade. I am still trading my prop firm account. I had little setbacks. I had to get my psychology right and stuff like that, because I don't know how far, I think I was only like $200 away from passing it. I think at one point I was even, I actually already had the amount needed to pass. So basically, I'm just going to break it down. On this trade, I made $768 after tax, like the fees and stuff. So I'm going to show you all that. And then, let's see. Nah, is it not going to let me show y'all the... Nah, I have to be on the full screen for that. Alright, I'm going to just break down why I took the trade and just talk a little more about the model that I'm not going to say I came up with, because I'm using ICT's concepts, but the model is based off of what I've seen the market do with my own eyes and how I've seen it move. So, and I've went back on back testing all the way to 2020. And even in 2020, the market was still moving the way how I'm seeing it move right now, which was very reassuring for me that this is something that'll last the test of time, instead of just being something that is good for a little while and then falls off the next day. So basically, what I waited for was a sweep of liquidity from a high or a low. We got that sweep of liquidity right here. So once we got this sweep of liquidity right here, I then dropped down to my 15-second time frame. As y'all can see, let me make sure it looks good over here on my OBS studio so that y'all get the best visual. We got the liquidity sweep right here, right? I then restart my analysis and I wait for the 15-second to then create highs and lows on the chart. So as y'all can see, it made a low. This was my low. I was originally looking to get swept, but then it came up, made a high, made a low, made another high, and then we swept this low right here on top of tapping into these 15-minute fair value gaps and 15-minute IFVGs while tapping into the 1-minute fair value gap. And then we inverse not only this fair value gap, but we inverse this one too. Hence, this inverse fair value gap is the one I entered off of right here, as y'all can see. Once I got my entry, I then went back to my 1-minute time frame, aka my higher time frame, and I put it from the low right here to this high. This, like, I don't know how to explain it, but basically these are like this high and this low is what I look for to get taken, like as far as liquidity wise. But like this little low and then this little high right here is what I use for my standard deviation, so that way I can then get targets for my take profit. Now I chose to target the -1 just because. Why? I decided to target the -1 just because it made more sense to me, because we already swept liquidity before we got here. Like, as y'all can see, it just started running up. So we already swept liquidity before we got here. And then we were sweeping liquidity coming into these fair value gaps right here. Now, usually I would target the -2, but for me, using my discretion, being able to make my own choices and stuff, and not just basing everything off a mechanical strategy, being able to, add my experience and my intuition into it and being able to make my own decisions, I Decided to target the -1 because I felt like price was going to give us a reaction off of these fair value gaps, which it is right now, just because we swept liquidity coming into here. So that is the reason why I decided to just go ahead and take profits off right there. This trade, even though y'all can't see it because I brought the stop loss to break even to protect my funds. Once this candle got right here, I put my stop loss at break even. But it was a 1 to 3.95 trade. So 1 to 3, well, basically a 1 to 4 R trade. And I was risking about, how much was I risking? I think it was 3.95 because it said I was risking like 300, but this math ain't mathing though. I don't know, boys. Let me think. Because we entered in right there, right? Hold on. Because it said 3.95, I swear. So, here. I might be wrong. So, stop was like right there. All right, my fault, boys. It was a 1 to 2.2, or it was basically a 1 to 2 risk to reward ratio. So I was risking like $364 or $354, one of those two, and I made 700. No, what am I telling y'all, bro? It's like I don't even remember. Oh, I made $780 something because I took it out a little bit early because it started stalling out right here, so I took it out. I was supposed to make 800 and something, but I took it out a little bit early because it started stalling like right by TP. So, yeah. We made about 700 and let me just check real quick. Get off the camera. So, yeah, I made about $768. I don't know if y'all can see that. Yeah, I made $768 and about, we entered on this candle and then we got out on this candle. 231 in 3 minutes, $768 in 3 minutes. Yeah, that's basically the trade breakdown. One more time for y'all and one more time for myself. So I can keep watching these videos so that way I don't forget the model and the reason why I did things. Hold on, y'all. I'll be right back. I'm recording a video, baby. I'll be right back. Dog, trying to say what you trying to say? Home skillet. Home style burger. Goodbye. All right, I'm back, y'all. So, like I said, one more recap. The higher time frame, I waited for a liquidity sweep in either direction. We got a liquidity sweep. We took out a low, so I'm thinking we want buys. I look over here and there's this 1 minute fair value gap. It was tiny. I had to expand it and stuff, but that is a fair value gap. So once it hit this fair value gap, I then dropped down to the 15-second time frame, making sure that this fair value gap doesn't get disrespected, which it didn't. As you can see, this is 30 seconds. This is 45 seconds, and the 45-second candle closed above this, meaning it's still good. And then I'm waiting for more. Info to pop up. So we came down here, swept it out. Now I'm waiting to see what price is going to create and what it takes out. So going further, we're like restarting the analysis. Going further, starting from here, we make a high, we create a low, we make a high, low, high, and then we sweep this low, touching these. Let me get this out the way. Touching these. This inverse fair value gap, this fair value gap right here, and then also touching our 1 minute fair value gap and still respecting it. Then off of this liquidity sweep, touching these, all these fair value gaps and inverse fair value gaps, we then inverse this one, this fair value gap, and we inverse this fair value gap, which is my entry signal. So I decided to enter off of this fair value gap right here. Entry was right here, so it was a little bit up here because of the spread. My stop was below the low, so I came back to the 1 minute to make sure I was putting my stop on the right low. I put my stop below the low. I then drew my Fibonacci from this, we're going to call this short-term low, just so that way we don't get it mixed up. I drew it from this short-term low to this short-term high. And then, based off of the info that I see from the chart, I then decided to target the -1 area instead of the usual -2, because right here we sweep liquidity right before we hit the -1, and the -1 is lined up with these bearish fair value gaps, which, in my opinion, using my own discretion, believe that this would be a good area with all these other signs for price to then come back down, which is exactly what it's doing, giving us a retracement. So I just put TP at the -1 right here at the fair value gap. Got out a tiny bit early, like maybe like 3 pips before TP, because price was just stalling out. It wasn't moving up, it wasn't moving down, it was just sitting there. It was like kind of like inching up, inching down, inching up, inching down. I got out. So yeah, guys, that's why I got in this trade. We're no longer in drawdown now. That's great. That's great. Even if we were in drawdown, we're gonna get back out of it as best as we can. We're not a stranger to drawdown, baby, but we are better at handling it, and we don't look at it as a bad thing anymore. It's just keep trading, keep doing what you're doing. Let the risk management do the heavy lifting. Just follow the strategy, follow the rules. And also, when I'm not comfortable, I don't feel like I'm trading with clarity, I don't trade. Hence why I have not blown this account, even though I was in drawdown. So now we're up $115 on the account. I need to get up 2,000 to 52,000, and it's at 50,115. So the goal is to pass my first ever funded account. But I've learned my lesson. It's going to happen in its own time. I'm not going to get excited. I'm not going to let the fact that I could pass my funded account get in the way of executing my strategy and focusing on what matters, which is becoming a better trader and seeing the lesson in everything. Yeah, seeing the lesson in everything. Definitely, this is a trade that I had a pretty good confidence in. So yeah, I'm going to try to keep y'all more updated, try and post more videos, and yeah, we'll just go from there. I'll try and keep y'all updated with the challenge. I definitely will be posting a video when I pass the challenge. We're gonna do our best, or if I don't pass the challenge, I'll make a video too. It's okay. And yeah, thank y'all guys for watching me. If you ever forget it, if you ever forget the model or you forget something about it, please come back and watch this video. I hope I explained it well enough. If I didn't, this is your second time remembering everything about the model. You already know you did it once. You can do it again, no matter how many times something may slip your mind. Alright guys, well, I'll see y'all later, and I will see y'all in the next trading breakdown.